What's going on, guys? Welcome back to Way Up Trading. Today was an awesome day in terms of trading. Not too good for the market, but overall we were able to grab some of the downside move that happened on the SPY today, take advantage of the play, and make a good return on investment overall. Today we're going to be going over the setup, how we took the trade, and also recapping what's happening with the market and what I can expect to see going forward. Also going to dabble a little bit into what's happening with AMC, where we stand, what we're looking for going forward into the next couple of weeks, and a couple other good plays that I see some upside potential possibly as long as the market can hold up. And we're going to take a look at that right after this.
Oh, I watch the stock market channel all the time.
All right, let's jump right into the charts and take a look at the action that took place today, starting with the SPY. I got the SPY pulled up here on the 1 hour chart. Taking a look here, you can see we've been in this broadening top pattern, which basically is showing that we've been playing an up and down movement throughout a broadening channel. And we topped out yesterday off of the short squeeze style move that took place yesterday after we got the jobs report data that came in, and the markets literally just ripped all the way up to about the $420 mark, just about filling the gap that we had up there, but not fully. I believe we still have a gap sitting there around about 421, and had a huge retrace today after Powell got on the stand and literally tanked the markets.
What? Sell? Dump it now. Dump it all.
I still see potential downside going into the coming week. I picked up a few puts during the speech or just before the speech because I had a feeling that things were going to move to the downside. Taking a look at the charts, being that we're now playing the top side of this wedge here. If you follow me on Twitter, you would have seen that post that I mentioned the other day, which showed that we were playing this pattern, and there's only one way this is going to work out. It's going to come back down to test a level of support, being that we broke out a little too prematurely after the run that we've had that was basically a short squeeze. I believe it had a lot to do with the OPEC date that we're starting today. Some short covering rallies took place yesterday that was shrouded around what happened with the jobs data. However, things started to run really hot. A lot of plays went into the money. A lot of folks made a lot of money this week. Hopefully you're one of the folks that had the opportunity to take advantage of the upside move. However, that all came to a screeching halt today after Powell got on the stand and started speaking the way Powell speaks.
Dump it.
And we went from all the way from about 421 as a high today, dropping all the way down to about 417. All right, I went ahead and zoomed into the 5-minute chart to get a clearer picture of how things took place today. So you can see here we were still pretty hot, bouncing off my levels of support and resistance that I have, sitting about 415, 417, and they literally just took off yesterday, running all the way up to that 421 mark, just about touching the gap that we have up top. But that topped out really easily in the pre-market right before we started to pull back. I mean, after a move like yesterday, a pullback was going to most likely be necessary, but it was also expected with Powell getting on the stand that people are going to be a little bit more timid in the markets, as well as take some profits from all the move that took place yesterday.
Call me when it's dumped.
So things actually wound up playing to the downside. We hopped in some puts early in the morning, around 10 a.m., just before the move took place. I picked up 415 puts, 0 DTE, and played them to the downside all the way down, which wound up being close to a 400% play. I called it out on Twitter before I went ahead and made the move. Hopefully we're able to catch a piece of it, but it wound up being a great play overall. However, once we did go ahead and make that move to the downside, we started to flag and create this bear flag setup here that we have, playing the downside and upside all the way throughout. Just volume wasn't really coming in. That's a little bit more zoomed in. You can see that the volume started to basically run on the downside move, and it just literally waterfalled all the way down right in the 9 EMA after we got the cross and confirmation. I have order blocks turned on so you can get a clearer indication of where the selling pressure really took place, which is just about that 420 mark. I know a lot of bears were probably loading up puts when they saw the opportunity to jump in, probably for the long side, longer dated puts to pretty much get ready for what I believe is going to be a very huge downside move at some point in time.
It's better short.
If we don't get a higher high past the 420 mark, I have been calling around 430 for the longest period of time, but based on the movement I saw today, I'm thinking that we may be topping off right now on the market. So either ways, you can see that there was a lot of selling pressure here. This blue bar represents selling pressure. We got the crosses on the 5-minute, entered into play here just about the 420 mark, and just rode the 9 EMA all the way down. This is right when Powell started speaking, and I also posted on Twitter, once we crossed the 200 moving average to the downside, I expected this to continue all the way up until Powell really started laughing and smirking and things like that. I mentioned that it's time to exit the play because it looks like a little bit more of a jovial Powell will most likely turn the markets back to the upside. And that's where we exited the play on the 0 DTE put position. Things started bouncing around this order block here, where we started to get this setup here of a bear flag, which I believe is still going to play to the downside once things go into the coming week. I'm expecting to find support somewhere around the 417 mark. I expected to stay there today, but it wound up actually holding up pretty well above the 1750 mark, which was set up for a double bottom almost before it went ahead and melted down due to volume not coming in to support the upward move. After this tweezer bottom would have been a great opportunity to get in some calls, just because of the fact that it played a double bottom setup. Calls would have been a good entry here, 0 DTEs, maybe even 1 DTEs, but it was a clear indication that it was going to run back up, and you could have played this all the way up to the top here just before the 200 moving average on the 5-minute chart. So there were several opportunities to make money throughout the day. Hopefully you were able to grab 1 or 2 opportunities there, but they did exist throughout the market. Even though things were a little bit on the wonky side, there were opportunities everywhere. We try to catch them, and we want to learn from these opportunities when they come up. The SPY gave us a couple different ones. So overall, SPY wound up finishing about 418.62 mark. I knew it was going to have a little bit of difficulty, roughly about the 418.75 mark, which is a huge level of resistance. It basically is a very crucial line that has showed up on several occasions on this chart. I'll go ahead and zoom out to the further time frame, and just going to make a clear indication of what I think happened here and why this area is such a huge key level to break. You can see I have my fib levels for most recent time frames, 420.73, and then 1618 would be at 431 if we were able to go ahead and break back above 420.73. That is a possibility with this pattern, the broadening top pattern. You can get a breakthrough. If you do get a breakthrough or retest, the next move is going to most likely be towards 430. But we'll see how the other market winds up playing out in the next couple of days to the next weeks overall. However, it's going to take a look at the longer time frame. We're going to look at the weekly time frame, and I'll show you what I think is happening here and what we're running into. To do that, I'm going to have to run all the way back to 2008. Everyone's talking about the crash of 2008, and it is
the market's crashing.
Nuh-uh. Looking, in my opinion, starting to look a little bit scary. All right, so I got the SPY pulled up here. This is the weekly chart, and this is what seems to be where we seem to be bumping our heads on. That 418.75 mark is a very, very key area to break, and it's going to be a very tough one to break. And breaking it yesterday was a clear indication that the market does want to move up, but however, it is a big location to break, being that that was the very bottom of the 2008 market crash that took place all the way back here, just about January or so of 2009. In relation to what happened in 2008. So if we zoom in a little closer, you can see that line has several touch points where we played it below and above it for short periods of times. And when we did get above it, we have mostly a squeeze type of scenario. And right now we're bumping our heads right into it the same way we did back in May of 2023 and several other times throughout the last 2 years. And right now we're sitting right on the nose of it. We did get a wick above it, obviously going ahead and touching that 420 level. But if we do go ahead and cross this level again with some volume, you can expect this thing to start to melt up back toward the 430, even 440 range. I wouldn't be surprised if we did touch it. I mean, we're in a crucial spot right now. I'm expecting some more news to come out throughout the economy. Debt ceiling fears are not 100% out of the woodwork just yet. But if we do start to hear more news and what's happening with the economy, there is a possibility that if it's bullish, if they do raise the debt ceiling, this thing will continue to push. Obviously, tech is really, really strong right now, so we could see continuation. If not, this is going to be the area where we just dump all the way back down. I'm expecting lows somewhere around the 415, 410, and then from there back to 404, then 395 if we don't catch some kind of wind going into the next couple of weeks or going into the end of the month for the debt ceiling news. Now jumping into AMC, I have the 1 hour chart pulled up, just taking a look at some of the technicals for the last day or two after what looks like we had our high volume hammer candle that came in and started to push this stock back toward the upside after we had our retest or multiple retests of the falling wedge pattern that we've been mentioning. Was looking, as I mentioned before, I was looking for a inverse head and shoulders to play out. We have gotten a version of it after this double bottom of about 492, which played all the way to the upside at about 613, came back down. Double bottom setup with a inverse head and shoulders, which served as a retest of the falling wedge on the macro, and a secondary retest, it looks like, or 1, 2, 3 tests of this downtrend has already taken place. I was looking for a hold above 502, which we did wind up getting a close of 503 today, which is awesome in my opinion. This is basically confirming that this is going to start to head back up towards the upside. I'm expecting at some point to break this uptrend line that I have here at roughly about $5.22. $5.22 has been a location that they're trying to keep things under in order to, for whatever reasons, hedge options, or basically trying to keep it from breaking that area, because there would be an impulse move up in my opinion. If we can go ahead and break that location, we'd start to see the 525, 535, and then 550 mark going into next week. But as I mentioned before, there's just no volume left. There's nothing really holding this back. You can see that the increase in volume is starting to happen above the signal line. It's moving a little closer here. After periods of zero volume and just pretty much decreasing volume all the way down, you can see the green bar starting to pick up steam, and it's starting to head back up now above the signal line. And we did get that close above the 502 markers, which where I was looking for us to make sure we held above going into closing today. So far it is looking pretty good. I'm expecting the volume to start to pour in. Today was an OPEC start date, so I'm expecting something to happen in terms of what's happening with the heavily shorted stocks. We should see some kind of a rally in my opinion, but you know, if you're in calls, again, I mentioned this together on the last video, that it is moving very, very slow right now. Unless it's a really big influx of volume. What I went ahead and did is I rolled a lot of my calls over to the end of the month. $6 calls I'm actually looking for June 30th. If you're interested in playing those, pay very close attention. But right now, the IV on these things is very, very low. So opportunities all over it. I'm sure that their market makers and things like that are hedging their positions with out of the money calls. So keep an eye on this on AMC stock. I think there's going to be some big moves happening within the next couple of days. I mentioned this before. I'm looking into about a 70 to 100% move within the next couple of weeks. So keep our eyes peeled. Make sure you're protecting your position. Do what you got to do. But I do see several upside opportunities happening with this thing in the next few weeks. So overall, it was a fabulous week in the markets. Things went really well. There was a lot of opportunity, a lot of money that was being made, obviously on different plays with the market rip on different sectors, as well as the tech sector, which went nuts. Nvidia was a huge play. I paper handed Nvidia just a little bit, but it still wound up being a good play overall. Nvidia obviously rocketing regardless, going up to crazy levels. And AMD, the SPY, you name it, pretty much was free money out there. Hopefully we're able to take advantage of it. Next week is going to be a little bit different in my opinion, but let's pay attention to what's happening. But in the meantime, take a break, enjoy the weekend. Don't worry too much about the stock market. It's going to be there on Monday. Make sure you take some opportunity to be with family, enjoy your time out, enjoy some sunshine if you wherever you are, time with friends. The market's going to be there. But either way, if you enjoyed this video, we're going to be here every single day, pretty much growing our portfolios together. And as I like to say, we're making the outcome income for 2023. If you like the video and like the content, please go ahead and like and subscribe. Make sure you follow me on Twitter. I post a lot of high quality plays there and good information about what's happening with our favorite stocks. So go ahead and click the subscribe button, hit the notification bell, and let's do this for 2023. Hope to see you guys about how we actually go ahead and take some momentum trades and what we look for on a daily basis to make money in the markets. Have a small video here. Take a look at that. Just a quick overview of how we actually trade momentum, and hope to see you in the next video.